a quick story. Mike's the one who told me to start a blog. This was 7, 8 years ago, and I decided I wanted to write a book. He had just published his book, One Good Trade, which is sitting right here next to me. I highly recommend everybody read it who's interested in trading. Great stories there. Mike, you had just published that book, and I told Josh I'm ready to write my book, and he goes, go see Bella, go see him down in Financial District and talk to him. And I went into your office, and you said, so you want to write a book, huh? I'm like, yep. He's like, why don't you start with a blog? And literally a few weeks later, Phil Perlman is helping me build allstarcharts.com. And, fast forward 7, 8 years later, and it's become one of the fastest growing technical analysis research companies in the world. So I want to personally thank you for nudging me.
So JC, that begs the question: when is the book coming out?
Well, so I have a deal with Wiley that I've signed. So Wiley, if you're out there listening, I'm working hard at it. It's almost done. I promise I'll get it to you. They've been good with understanding that I'm running a business and managing a portfolio, and certain things have to take priority because that's what it is. But Wiley's been good, so I'm looking forward to getting that draft over to you guys. Thanks for the patience. So Bella, do your thing, man. I really do appreciate you being here. I'm really, really curious to see what you have. Bella always has some excellent stories and great tidbits from the trading desk, and I think this is a huge value add, great contribution to the content that we already have.
Hey JC, what screen are you seeing? Are you seeing my presentation?
I see 5 lessons. I have a laptop next to me with another one, so I'm seeing 2 different things. I'm still seeing Charlie's presentation. Guys, can you let me know if you're seeing Charlie's presentation or if you're seeing Bella's? Because on my desktop here, I'm seeing yours. On the laptop, I'm seeing Charlie's still.
Hey, I got one of our really hard working traders in here, and he's saying that he sees mine.
Okay, perfect. I see yours too, and everybody's saying they see Bella's. Perfect. So it must be my laptop. So all right. What's your trader trading right now? Oh, I guess it's an overnight session, so I guess he can go.
He's working on a back test for a model that he and his senior trader are going to be putting in production pretty soon.
All right, awesome. Do your thing, man.
All right, 5 lessons from the prop desk. I am Mike Bellafiore. I'm the co-founder of SME Capital and SME Training. I'm the author of One Good Trade and the Playbook. The benefits of this presentation for all you listening will be, I will introduce some SME traders, train from new to high-performing traders and better for some of them and why they've succeeded. Share some of the strategies that they use to succeed. I'll share my favorite setup. You guys will get a chance to learn my new favorite trade to teach. And just to take a step back, I run a proprietary trading desk in New York City called SME Capital. We are a P&L shop. We bring guys in from scratch, put them through our training program, are patient, work with them daily, put them on teams with senior traders and weights and more, and hopefully they become high-performing traders and the best 7-figure traders and better. We trade stocks, options, futures, systems trading, automated trading, and we're in New York City in Manhattan. And as Charlie said, I found his last slide to be illuminating. We are professionals who are humble, working hard. A bunch of our guys are in here today on a Saturday, working on back testing, modeling, watching film, going over their work, doing playbook trades, sorting through their stats, looking through data, coming up with ideas for Monday, talking to their guys, talking to their friends. That's the process of being a pro trader, is being an elite athlete, being an elite performer, getting after it every day and keeping after it through different types of markets. So I'll answer any of your questions if you want to put them in the chat. I'll offer a perspective from my unique seat in the trading community. So I'm a managing partner of a proprietary trading firm. I also run SME training. We spun off.
Bill, I don't mean to interrupt, but it's the screen continues to flash, so it's kind of like unwatchable. So what I'm going to do is I'm going to take you off the presenter and then give it back to you. Okay?
You got it.
Sorry about that. I was getting some comments that it's just unwatchable, and I was seeing what it looks like, and I can only imagine the headaches people are getting trying to see that. So let me just give this back to you now. See if that works.
How we doing?
Looks a lot better. All right, looks a lot better. Sorry about that.
No worries. All right. It would not be an online webinar if there were not technical difficulties. So
We've been pretty good up to now. I'm not, you know, not bad. Yeah, pretty good.
I am very impressed with that. So hopefully I get a chance to share my unique unique perspective in the trading community as a managing partner of a P&L shop. We back all of our traders. We don't have any clients. We don't take any investor money. Our job is to make sure that we are producing P&L, or else we're going to suffer a little bit. But we also spun off an education company called SME Training a bunch of years ago, and the global community gets a chance to tap into the same training that we offer in options and futures and equities to our guys here. And I wrote a couple of books, and as a result of being a partner, I get a chance to talk to a lot of different other managing partners at trading shops, understand, listen to them, ask them, hey, who's doing well and why? Because I wrote 2 books, a lot of people reach out to me, sharing their success stories. As JC does, I also blog pretty regularly. That's what I did before I started. Before I wrote a couple of books. And a lot of people will reach out to me and share their success stories. And I think what we tend to do is we share the success stories of the people on our desk. We're very positive. We believe in positive psychology. We don't get dragged into a lot of the mud that you see out there in the trading community and the Twitter sphere. Our message is very clear, which is we're sharing ideas about how to get better at trading. And so we get a lot of people reach out to us with those types of success stories. We'll introduce our free daily video as a new trading resource for you. So at the bottom you can see smeu.com/daily video. We put out this free daily video every day. You can get it. We'll have a trading lesson, or perhaps a trade on options and futures and stocks that we're sharing with the community. And then I'll do something a little bit fun. I'll reveal what I think and what I've seen it takes to be $1 million trader. So we call that the $1 million trader trading formula. And perhaps some of you will find that interesting. So let's talk about my favorite trade. We actually saw my favorite trade, which I call a changing fundamentals trade. We saw it in Mattel. When I say we saw my favorite trade, what I mean is we saw the variables for my favorite trade. I'm an active trader. Our guys here are active traders. We're making lots of trades, hundreds of trades, millions of trades on a monthly basis. And this is a trade that comes up daily, multiple times during the day. It's particularly effective during earnings season, which we're right smack in the middle of right now. Started it last week, going to really pick up next week. And we saw that trade in Mattel. So the trade strategy is look for a stock gapping down. I like to look for stocks that are gapping down 3% or more. Look for a stock with a negative news catalyst. What I mean by that is something that's going to miss on full year guidance, some company that's lost a product, some company that's hurt on margins, a company that's losing market share. In this case, we see a fight on the tape where the seller wins. We're seeing, and that's a little bit of, this is a technical summit, and so when we're putting together trades, we're looking at technicals, but we're using other factors to make trade decisions. So we say reading the tape. And in this case, the tape gave us some indicators that the stock was a short. It was holding below VWAP, a really important, probably the most important and most effective indicator for short-term traders. No longer term technical support in sight with this particular setup, so I don't have to worry about, hey, the stock's going to run out of juice to the downside because there's a big support level coming up. We've got clear sailing. We've got a beautiful staircase stepping down chart setup, visually appealing on our charts for the way I trade. And for us, this is a hold short for a real move as an intraday trader. And literally the way I traded it was I found a spot where there was weakness, where these variables set up, and I got short and closed it out right at the end of the day. So the big picture, when we think about trade setups, we think about 5 very important variables that go into a trade. We want to think about the big picture, which means, hey, where's the market overall? Are we breaking out to new highs? Are we hitting up against resistance? Are we, broken on some important technical levels? In this case, we've got SPY congesting after making and closing all-time highs yesterday. So we've got a strong overall market, and that's important for us as active traders because we're going to be less likely to get short and we're going to be more likely to get long. So the intraday fundamentals for this trade, we want to put together these 5 variables, remember. Big picture, intraday fundamentals, technicals, reading the tape, and intuition. So our second variable that we want to look at are intraday fundamentals. And in this case, you can see on the screen, gross margins are getting hit. Gross margins are decreasing from 50.2% to 47%. That's a red flag for us. When I see gross margins decreasing, that's going to the top of my idea sheet for something that I'm going to look to short. Now, conversely, if gross margins were increasing, that would go to the top of my stock selection idea sheet, looking to trade that on the long side. Average true range, 1.112, which means how much does the stock move intraday? We want to look at the average true range because we don't want to trade stocks that don't move. Average volume, 4.4 million. We don't want to trade stocks generally with an average volume of less than 0.6 million, and we don't want to trade stocks that have too much volume because they're too thick and it's too hard to figure out if they're going to go up or down. RVol is 8. This is a key indicator that we look at as intraday traders, as active traders. This means the stock is particularly in play. It essentially means the volume on this given day is 8 times what it normally is. That's a terrific indicator to be looking at as an active trader. The short float is 12.6%. We don't want to trade stocks that have a short float that's way too high, short interest that's way too high. They're too whippy. I want to stay away from stocks that have a short float over 30%. When I see something has a short float of almost 13%, that's pretty high actually, and that's actually going to go into my trading. That stock has more natural buyers in it than a lot of other people. The market is just a reflection of supply and demand. The higher the short interest, the more natural buyers there are to come into the marketplace who have to cover. So when we take a look at our longer term technical chart, you've got a chart right here that's broken down, and a huge shout out to one of our guys on our desk who put together this trade presentation for me. Stayed up and helped me put this together. And as you can see, this stock is below major support. So when we were talking about putting together a trade, that's important for us. I don't want to trade something that's got support in 25 cents. I want to see something clear and clean to the downside for this particular type of trade. So I wrote a blog post about this trade actually in real time, and I pointed out, and we did a video on this actually in real time as well. And so in sort of the middle of this trade, I was in it, started my short at 27.45, and I was in it, and I just put a note out to the community, hey, you know, this is a pretty good setup. And when I talk about a staircase stepping down intraday chart pattern, that's that. That's that. It is visually appealing. It is making new lows. It's not going up much. It's clean. It's heading down. That tends to happen when you have a news catalyst that's so poor for the stock. Missing on margins brings out sellers. Missing on margins brings out shorts. So in real time, I said, hey, I don't know if it's going to go up or down, but I'm short, and we like the idea, and if I'm in it, if it stops me out, it stops me out, but I'm going to stay in it it gives me a reason to get out. And so, you know, my trade overall, and again, this is one of our guys writing up a nice report for you all to think about. My trade was short at 27.45 because that's where I saw real volume, a real fight on the tape. There was buyers and sellers coming together at an important time on the tape, and the sellers won. And so I started my swing short on an intraday basis from there, and I actually held it until there was a reason to get out of it, and there never really was. When I think about reasons to exit, I'm thinking about it's got to break its downtrend line, and right there it's not breaking its downtrend line. And right here it never breaks its downtrend line. It always stays below VWAP. It's always making new lows. I'm going to stay in it until they need to get me out. And again, you know, this is one of our guys going through some different ideas. My swing in this case, 27.45 down to the close. All right, so let's talk about lesson number 2, which is my new favorite trading setup to teach. It's a really tight wedge pattern for technical traders. It's a consolidation pattern, as we say on the desk.
Bella, you're jumping again. So before you go on to the next lesson, I'm just going to do that, just to reboot that again like I just did before. Hold on one second.
All right, we good? All right. So lesson number 2, my favorite new trading setup to teach. And, you know, look, a lot of what we do right here is, you know, we'll bring in about 15 guys a year, and we spend the first 8 months of them just with me and our floor manager. And every day I'm teaching them new setups for them to go take a look at. And this is the new setup that I really love to teach on our desk. And it's a setup that a lot of our guys are having a tremendous amount of success with. One of our guys actually went from a floundering guy to a 7-figure trader. And when I say 7-figure trader, I mean this is somebody who put up 7 figures in profits on a yearly basis. And again, not somebody who's been trading for 20 years. This is a newer guy. So, and he did it only in this setup. This is his favorite setup. 95% of his gains are from this setup. So my new favorite trading setup to teach is what we call a wedge pattern or a consolidation pattern. The reason that I love to teach it is our risk reward is remarkable. You're talking about a 1 to 10 and better risk reward. You know exactly where you're wrong in the setup. Your exit is clearly defined. And I just want to take a step back. As an active trader, as a professional trader, I'm wrong a lot. And as JC was sort of saying, a lot of guys go on TV and pontificate about the direction of the markets. I actually had a conversation with somebody who wanted me to come on the financial media and do a couple spots for them. And I said, here's the spot that I would think about doing, and let me tell you what I'm not going to do. And what I'm not going to do is come on and answer questions about where Apple is going to go. If you want somebody to come on and answer questions about where Apple's going to go or where the SPY is going to go, I'm not coming on. And so we talked through that, and we came up actually with an idea that we're talking about for a spot that makes sense for what really happens in marketplaces, which is you just put yourself in a position to control your risk reward. You just put yourself in a position where your risk is much less than your potential reward. You just put yourself in a position where you're in patterns that are good for you. And so this trade, what I also like about this trade is that it doesn't require many trade decisions mid-trade. You can kind of sit in it, see if it's going to work or not, but not a ton of decisions. You see the setup daily. It's an easy trade for students to understand. This trade, as I mentioned, I've seen spur floundering new and developing traders to become seven-figure traders. So let's talk about that trade. And again, shout out to one of our students, Brian, one of our newer guys, Brian, who put together this trade for us. This is a trade in CSX, which has been very much in play, particularly over the last week or so. Long, short, long, short. As active traders, it's been terrific. Perhaps as longer-term traders, it's made your head spin. Swing traders, perhaps it's been frustrating. It's been great for us. So this is what we call a third-day play. That means day one, it had earnings or a news catalyst that was meaningful. On day two, there was follow-through, and now we're talking about day three. So the big picture was the SPY was strong, and CSX was particularly strong, relatively stronger than even our strong market. The intraday fundamentals for CSX, it's a transportation company. Its ATR is almost 2. Its average daily volume is 15 million. That's high. Its R-vol on this day wasn't particularly high, which is something to note. I want to trade an R-vol and a stock on an intraday basis that's high. So last time we saw 8. I want to trade something that's 3s and 4s and 5s, something that's indicating to me that it's really in play. There's really people interested. The short float is really low. The float overall is not so bad. Why do I want to know these stocks? Why do I want to know these stats? When I look at these stats for every trade, they help me determine how the stocks are going to move on an intraday basis. So the technicals for this stock are, on a longer term basis, it's breaking out. We want to look at our longer term charts. The stock is strong. It's breaking out. We don't see any overhead resistance. On a 3-month chart, it's strong. It's breaking out. We don't see any overhead resistance. Now we come into our intraday pattern. This is that tight wedge pattern that we were talking about. We're narrowing in all the way from.
Okay.
Now we look at our 1-year chart, breakout, 3-month chart, breakout that we were talking about.
Gail, we can hear you. If you could put it on mute until you're up, that'd be great.
Okay.
Thanks. Sorry, Bella.
And then we're coming in to our 1 minute, and we're seeing a tight wedge pattern holding above VWAP. Again, we mentioned VWAP is a very powerful indicator for us as active traders. We want to see stocks holding above VWAP with that wedge pattern. When we see that, we want to look for areas to get long. Strategy is, in this case, to buy the breakout of that tight wedge pattern. You can buy the bottom of that wedge and then buy the breakout if you want. So you can go tier 1, buy the bottom, tier 2, tier 3, buy the breakout, or you can just buy the breakout. That's up to your trading style. But again, we've got a strong stock on the long term, and we've got a really good looking chart setup with a news catalyst behind it on the intraday setup. So our exit, we're getting long, not until there's a break of the trend line, not until the stock gets too vertical or trades to your target price. There needs to be something clearly different on the tape or breaking news that changes the trade. The point is, you want to stay in this trade until there's a reason to sell. Something needs to get you out of this trade. Going over a second example of our beautiful wedge consolidation pattern. We saw this in ATI. So our big picture, market strong. Technicals, stocks breaking out. 1 month, stocks breaking out. Again, we've got that tight wedge pattern holding above VWAP. We get a nice volume spike confirming the breakout. You want to buy with a stop against VWAP, and this is a trade to hold. You want to stay in this. We flip over to a 5-minute chart. Our 1-minute chart is showing us a beautiful, nice wedge pattern holding above VWAP. We look at multiple time frames. We see this stock holding above with a tight wedge pattern, and then we get a huge volume spike confirming the breakout. Volume confirms to us that this trade is more likely to work. We're staying in this until there's a reason to sell. I wrote extensively about this in the playbook by how I define a reason to sell. General ideas: break of the trend line, breaking news that changes the trade, too vertical to the upside, where now the risk is too much to be long. Tape clearly changes, or time. Maybe it's just not going up anymore. Let's go to lesson number 3. So this is swang, and there's this thought process out there that scalpers can't make a lot of money, and this is a month that he had recently. Made about $180,000. He was negative twice during the month, and he was negative 2 days during the month. And what's interesting about this is not so much that he made a lot of money for a 20-something-year-old. It's that if we were to rewind 4 years before that, his monthly numbers would have been $4,000 a month. But he kept sticking to his strength. He is a terrific scalper. So if anyone told you can't make a lot of money scalping, that's just not factually accurate. And if anybody tells you there is one way for you to go about trading, well, that's not factually accurate either. And swang teaches us the importance of trading to your niche. I have to take a step back and sort of talk to you about how swang not only found a niche, but he found a niche that highlighted his talents. That's very important. Not only do you want to find a niche, but you got to find a niche that highlights your talents. We used to actually trade a certain subset of stocks through a third party. We went to this third party. They were a tier 1 firm. We said, we need access to these stocks. We don't have access to them. This firm gave us a platform. They gave us routes. They were the largest player in this space as a market maker. And we started trading through them. So they're just essentially collecting tons and tons of money on us by allowing us to trade. We start trading. Very early into the relationship, we get a call from the head trader of this tier 1 firm. Who the hell is that swang guy? You got to tell him to slow down. And I'm like, what do you mean tell him to slow down? He's not a high-frequency trader. He's manually entering orders. He's not putting in orders, canceling. He's just trading. And you guys have all these advantages. I'm like, we don't want to lose the relationship. We're going to have to go tell him to slow down. And so we do. He slows down. Shortly after, head trader calls us up again. Pissed. I told you effing swearing. I told you and cussing. I told you to get swang to slow down. He's killing our market makers. We're going to pull this whole relationship if you can't get him to slow down. And so I'm like, what do you want me to do? You want me to tell him to count? Actually being facetious. He's like, yes, I want you to tell him to actually count. We're electronic trading. We're not HFT traders. These guys have 80% of the market share and market flow, and they can't trade against our trader who's entering orders manually. And so I'm just like, well, what would you like me to have him count to? And the guy's like, 45. I'm like, 45? Okay. And so eventually they ended up pulling our business because even at that rate, they couldn't make any money against us. The point is, he's so fast as a manual trader that a tier 1 firm couldn't keep up with him with all those advantages. Trading on their platform, trading through their routes, with them having all the order flow, they couldn't handle him. And so he is finding a niche, and a niche that matches his talents. He's an incredibly fast thinker. That's what you want to be thinking about as a trader. Maybe some of you are more analytical. Great. Think about swing trading. Maybe some of you are more quantitative. Great. Think about automated trading. Maybe some of you are really fast decision makers. Great. You shouldn't be a long-term fundamental trader then. You want to find a niche and match it with your talents. That's exceptionally important. What we do here in the first 8 months on our prop desk, we trade a lot of different strategies and a lot of different products. We train people through our same trading program. We expose them to lots of different types of setups, and then it's up to the trader to start gravitating towards a setup and a style of trading that's best for them, that makes sense to them, and that fits their talents. And then we have them interview with senior guys who trade very different strategies. Some guys are scalpers, some guys are swing traders, some guys like low floats, some guys are international arb traders, some guys are more automated, some guys are inefficiency traders, some guys, there's a lot of different ways that people go about trading. But at the end of the day, we're matching people together because that's how we get the most out of them. And so you want to be experimenting with different types of trades. If somebody like myself comes and tells you, hey, this is my favorite trade, that doesn't mean that will be your favorite trade. Go try it. Go experiment with it. Discuss, see if this is a niche that's best for your talents. If it's not, that doesn't mean that there's something wrong with what I taught you. It just means it may not be best for you. So lessons from Swang. Trade your niche. Trade a niche that highlights your talents. Consistently and with a process, push to trade bigger. He's gone from $4,000 a month to hundreds and $200,000 a month. Doesn't hurt to be the politest person on the desk, particularly to managing partners, as Swang is. I wrote about this actually in the playbook. The guy's really polite. And high ability to process information does matter in trading. This has been studied across different types of timelines and products. The best traders really do process information very quickly. Now, they don't have to as fast as Swang, but all types of traders process information quickly. And so I'll share one anecdote that's very recent. SMB, about 4 years ago, entered a joint venture with the Kirshner Trading Group, which is out of Austin, Texas, to partner with them for our trading business. And they provided us with the best technology in our space. And they provided us with the ability to offer 20-somethings books of $20 to $30 million that at the time we couldn't offer. In fact, in our space, it's uncommon to have a book of more than $5 million because we're so actively trading. But our 20-somethings and 30-somethings, it's frequent and common for one of our better traders to have a $20 to $30 million book at their disposal. They use it when they need it. It turns good days into great days. August 24th, 2015, our firm made $70 million because it had access to a ridiculous amount of capital and ridiculous technology that other people don't have access to. That money lasts. Those days matter. They don't come along a lot, but while we're in the weeds trading in and out, we also want to make sure we're capturing those huge days. And so 4 years ago, when we started our joint venture with the Kirshner Trading Group, some of our newer guys looked at the P&L of the KTG legacy traders who've been trading for like 20 years, 15 years, 20 years, been around a while, and we're almost in awe at the types of money that they were making. And these guys were making 4s and 10s and 20s on a monthly basis, and they put their heads down and they really worked. They put their heads down and they really worked. They put their heads down and they built from their strength. They put their heads down and they got their hands dirty with the technology. They put their hands down and they pushed themselves to trade a little bit bigger, just like Swang did. Slowly and consistently, they got better. I was at Austin's firm party last weekend, and those same KTG legacy traders who our guys were in awe of were coming up to me and saying, who was that Swang? Who was that shark? Who was that Memo? How are your guys making so much money? And if you're a junior guy at home, if you're a guy who's floundering, or if you're a guy who's not making enough, those guys and their path is something that should inspire you, because we've seen it here. We've seen guys go from 4s and 5s to $100,000 and $200,000 a month. We've seen guys go from 4,000 to 7-figure trader in less than 4 years. And if you're a senior guy who's making a lot of money, those junior guys are going to come after you if you don't keep working at it. And so I want to talk about SME training and why we do presentations like this and some others, and why we actually have SME training as it is, since 85% of our time in our business is spent on our prop desk in New York City. Why do you have this commercial education company? And so I want to talk about somebody who I'm going to nickname Nadal. He's one of our traders, and he's one of our traders that came through our college training program that we run at SME Training. And Nadal took this course. He was in-house with us for 6 weeks, and then he applied to the firm to actually get a job, to start trading with us. He showed some edge with his results. We got to know him in training, and he ended up gaining a seat on our desk. He had not even graduated college yet. And he's gone from, somebody who sat as a trainee in our college training program a couple of years ago to somebody who's putting up, 6 figures in a month. Somebody who has a tremendous amount of upside even from there. I want to talk about a trade that he particularly likes. And it happens to be in stocks which are called low floats. So what are low floats? Generally, low floats are stocks with less than 10 million shares as a float. They have a high short interest of greater than 20% based on the float. They're highly manipulated. They have wide spreads. They're highly shorted, and there's many potential short squeezes. One of the trades that we impress upon our guys to make is a low float holding multiple time frames. And so let's go through that. This is an example of a low float holding a 2-minute at 550. So we're looking at a 2-minute chart, and 550, as you can see, is a very significant level. If we take a look at our 5-minute chart, 550 is a very significant level. There's no reason why the stock should be up. The volume is elevated, holding on the 2-minute, holding on the 5-minute. When we look at the 10-minute, same thing. When we look at the 15-minute, same thing. This is an example of a stock, a low float, holding on multiple time frames. Those are very strong patterns that Nadal has used to create his career. In fact, just like that other trader that I talked about before, trading that one particular wedge pattern, this is his career. multiple time frame, low float support trades. So takeaways. This is one trade that works over and over, particularly in a strong market. Sector strength in a strong market is particularly helpful. Strong intraday charts are what you're looking for. Strong daily charts, highly shorted. You'll get a short squeeze with them. You're getting risk rewards that are very favorable. So let's go to lesson number 5, trade like shark. So it's essential if you want to be a lasting and elite trader to have a growth mindset. Shark had his mom visit during the summer, and I'll just share what I said to her. I think so highly of Shark that I said to his mom, "Do you have any more children?" He's not from an Ivy League school. He wasn't a Division I athlete. Wasn't particularly connected on Wall Street, but he has a growth mindset. A growth mindset means you come in every day and try and get better. And that does not just mean you're trading. That means when you're going to the gym, you're trying to get a little bit better. When you're putting together your diet, you're trying to eat a little bit better. You're trying to improve your sleep. You're trying to improve your mindfulness practice each day. You're trying to work on your relationships with your significant others. You live a life where you're trying to improve. Improvement becomes ordinary. Not changing becomes painful. You're always trying to make yourself better. You're creating goals. You're working at things on a daily basis. Well, Shark took a memorable and remarkable loss in a stock called KBIO. Lost $350,000. I actually think he lost more, but I'm going to go with his numbers. And lots of people after a loss that was just in one stock, lots of guys after a loss like this would retreat and hole up and be pretty despondent. Shark, he got even better. He used it as an opportunity to spur further growth. He got better in imbalances. He got better in automated trading. He got better in marketplace. He did a better job handling his risk in situations like KBO when they came up again. And so, one of the huge rewards of being a partner is that you see these guys come out of college and mature to become people that you really admire and that help you become better as traders and as people. At our firm, we have a practice where if you make 7 figures, you get a green shirt. And so Shark is one of those traders who has earned a green shirt. So one of the trades he really likes is a trade based on VWAP. VWAP is price times shares divided by the total shares for the day. It's a parameter of the average participant's price for the day. It's used by big banks and funds as an execution strategy and an execution benchmark. So let's take a look at how he used VWAP in this HMNY. As you can see, the stock is cleanly holding above VWAP. We get a nice volume spike to the upside, confirming the hold of VWAP and a push higher. We want to buy towards the bottom of this base as it's holding above VWAP and buy more as it starts to push away from its consolidation pattern near VWAP, particularly with that volume spike. VWAP is particularly powerful for swing traders if you look at 2-day VWAP. I actually think this is one of the indicators that people don't use enough when they're thinking about trading as active traders. This is an example in Google where Shark had an idea that, hey, he thought this was going to sell off a little bit. Google pulls right back up to the 2-day VWAP, which it had gap below, holds, fails, and trades lower. It's not a coincidence. This is something that you want to start thinking about, particularly if you're an active trader, incorporating how to use 2-day VWAPs. The lessons from Shark, A growth mindset is best for trader improvement, and every trade is a gift from the market for you to learn. And he does a remarkable job of just letting trades come to you. We do a trade plan.
Bella, sorry, not to start putting the music on. We have Gail Dudak who's coming on to finish up. So if you have if you would not to kick you out or anything like that. I don't want to be that guy either. But if you could just kind of finish up a little bit, that'd be fantastic. 'Cause I do have a question or two for you as well.
You got it. So let's get to that $1 million trader training formula and share that with you guys. And this is sort of what I've seen from training guys on our desk. A growth mindset plus passion for trading plus a strong foundation in trading plus experiment with different types of trades plus finding your niche plus finding trading edge in that niche plus train plus A+ setups that you trade bigger like Swang does plus talent plus bionic, use technology to find more of your trades plus patience, let trades come to you, plus perseverance, like Shark got knocked down, stay with it. Those together, if you do all those things and wait, that's a path to being $1 million trader per year. And my final lesson is how I end the playbook. You can be better tomorrow than you are today. That's the #1 lesson the market has taught me. JC, any questions? Happy to answer them.
I do. When you talk about, figuring out your strategy that suits your talents, the way I kind of learned it was, to find a strategy that suits your personality. Would you say that those are one and the same, or are those different?
So I think the first thing that you want to start thinking about when you're trading is, hey, what are the trades that fit your eye, that make sense to you? And I would just add one thing to your personality, which is you want to think about the reasons why you've been successful in the past and dive into that. So I know you were an elite baseball player. Why were you
elite is a strong word, I think.
Okay. You were a Division I baseball player, which we share in common. Perhaps when you look back on your history, you excelled in preparing better than other people. Perhaps you worked a little bit harder than other people, worked on your game a little bit better. That would suit you wanting to rip through tons and tons of charts more so than other people. So you want to think about, I've actually done this and to myself, and I've sort of figured out, hey, why was I successful as an athlete? Why was I successful in school? And I actually use that to choose the very specific trades that I trade. I match where I've been successful in the past with the trades that I take. And there are hundreds of trades that I know in my head, and only 5 to 10 that I actually take, and I match them with my talents.
I love it. One thing that I want to share with the rest of the audience, one thing you've preached to me, and I've certainly taken to heart, is that being a market participant is not a right, it's a privilege, and it's a privilege that we should appreciate, every day, that we're out there fighting to make a profit, right? You want to touch on that quickly before you run?
So one of the great exercises that I teach our guys is the gratitude exercise. And you want to get in the habit of scanning the world each day for 3 things that you're grateful for. This is an exercise we actually do with our kids at home before bed. And, if you start to get into the habit of seeing the world as opportunity. So as a trader, we can hit buttons and execute all over the world. That is new. That is so new. It was not that long ago that I was looking at one computer that if it went down, there was nothing I was going to be able to do. There was no help desk. There was nobody for me to call. I just had to sit there and hope that my positions actually worked out. Today, even retail traders can trade around the world. So if you're taking a loss in something, that's not something to carp about. You should be grateful for the fact that you get to do so much. and it's only going to get better. So this is an exercise we do. Luke and Reese and I sit down and do it. And Luke tends to be thankful for the chocolate milk that he got to coax Dad into feeding him, or the Paw Patrol character that he coaxed
That'll
me into
change.
buying.
That'll change.
But it's a great exercise and a great habit to get into.
I love it. You've definitely, you've definitely had a huge impact on my career, and that in particular alone is something that I think about constantly. Usually every 6 to 12 months or so, I'll tweet that out at you, and kind of remind my followers and kind of help me remind myself, even bad days are truly great and blessed days. So, Bella, dude, I really appreciate you being here. I think that was awesome. I love
Hey,
your
JC,
stories.
great job putting this together. Really wonderful. I really appreciate you thinking of us and coming by and talking to me about doing this. Really great stuff.
I love it. I love your stories. You always have good stories, and they're always fresh, right? Because you guys have so many traders, so there's always an interesting story, successes and failures, and we can always learn from them. So I think it was bringing you on is a great value add to some of the other contributors. Next we have Gail Dudak, legend on Wall Street for sure. A little bit of a longer term time horizon, a little bit different perspective on the market. So I think it's a good way to finish out the day. So Bella, I'm gonna kick you out and give Gail full access to everything. So Bella, I'll see you in New York in a couple of months. Beers on me.
Looking forward to it.